From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 13th, 2018. Today we're taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. Of course, this currency pair easily confirming the uptrend as we've seen higher lows and higher highs along the rising blue trend line here. Doesn't seem to be much in the way of the past 3-4 days stopping the rising trend here for the US yen. So it continues to pressure higher. So the question is, do we still get into it? I mean, we're at the very highest peak high. We haven't seen these highs since going all the way back to late last year, early this year. You can look back here to the left-hand side, and you can see we're back in January. We challenged this resistance high and began the downtrend. So it's been since January and late last year since we've been into these price ranges. So the question is, can we still trust the uptrend? Is it still going to rise? Or does this become a resistance zone like it did back there late last year, January, and we see the market turn around? So we need to wait for the right opportunity. If we're going to go long in the direction of trend, which is a fine thing to do, we need to wait for the right opportunity, not just buying because it's going up, because we might buy at the highest high and it ends up being a reversal. So we need to wait for the trade setup, the price action that indicates a continuation of the uptrend rather than just guessing that it's going to continue to go up. So we can see I've highlighted a couple of areas back here with the black circles where it got above the purple shaded area, which is 112.45 up to 112.60 purple zone. You see the black circles showing the market getting above there and going easily to the orange shaded area. Of course, it went higher a couple of times, but the most important part about today, intraday, is that it got above the purple zone and went to the orange zone, which is closer to 113.05, 113.30. So we want to watch for that. If it gets above the purple zone, we have this expectation historically and factually and statistically that it goes into the low 113s. So if that becomes a reality, we have an opportunity. Now, we also have to be aware that the opportunity could be reversal, and we'll watch for clues to that. Let's go ahead and zoom it in on current market price a little bit more. And so far yesterday, we saw the rally into the purple shaded area, and we had this expectation that if it could get above the purple zone, it would go higher. Well, as you can see here on the daily time frame, it has not been successful in getting above 1260. It's been holding there since yesterday and so far today. Not really an indication of reversal, but at least an indication of current resistance. Pulling back underneath there, of course, would look for it to go lower, 112.45. We may look for a little bit of a dip lower, which would take it at least at minimum to the blue shaded area, 112.20, 112. Back to support. And again, yesterday during the live trade room, we pointed out a similar situation right here. I'm going to highlight it with this black circle where the market found resistance at the orange zone, significant resistance high, came back to the pink zone, found support for 4 days or so, and then turned around and started going back up. So in that sense, again, the better long or buy scenario may be waiting for a little bit of a pullback into the blue shaded area, similar to what happened here down here between the pink and the orange zone. So that may be the better long scenario. It's not doing that, so we can't really take advantage of that at the current moment, but something to think about maybe going into next week. So we could buy the blue zone. The other opportunity is a significant and real deal breakout above 112.60, which of course here on the daily time frame we don't have. So let's take it on down to the 4-hour time frame, and it may look a little different now. As we get down here to the 4-hour time frame, we can see that the market did clearly and has clearly pushed above the purple shaded area, the 112.60 level. In fact, right now we're sitting on top of there as support. So clearly the clue here is don't sell. There's, if you're looking for reversal, this isn't it. We don't see an opportunity to go short. Yes, there may be a clue that it's going to break and go higher here on the 4-hour time frame, but worst case scenario, you just don't go short unless, I think, again, it gets back underneath 112.45. So if we're going to trade the trend, we're looking for an opportunity to go long. Maybe 112.60.45 may be our opportunity today, as long as it stays above there. Stop loss risk is pretty simple. You just don't want it to get underneath the purple zone. If it does, then you probably don't want to stick with a short or a long at all if it gets below the purple zone. So stop loss is underneath it if you decide to go long. Target, of course, is the orange shaded area for any longs that you might take or higher. The risk is it breaks back under the purple zone. So don't go short today sitting on top of the purple zone. Maybe an intraday opportunity to go long US dollar yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.